At Mines and Money in London, I'm talking to Paul Atherley, the Managing Director of Berkeley Energia. So, Paul, I know you just had some great news about uranium supply. Talk to us about that.
We're developing a very large uranium mine in western Spain. It's called the Salamanca project. And this is the time when uranium prices are at 12-year lows. So uranium prices have fallen 40% over the last 12 months. And so what we're looking at is which of the major producers are going to curtail production. We're looking for supply-side destruction. And just now, just a few moments ago, we heard that Cameco is making the very sensible decision for closing its McArthur River mine, which is one of its 3 big mines, for 6 months. And we think that's great for the uranium market because it takes a lot of supply out of the market.
Right. Now talk to us about what you're doing in Spain in more detail.
We have a project in western Spain. It's a historical uranium mining area, and we've committed to developing the asset. So we've just recently been to the equity markets here in London. We went for $15 million. We lifted that to 25. We took 30, but we could have taken $50 million. Massively oversubscribed. We're 67% held by very large institutions. And what they're doing, they're giving us money to put this asset, this mine, this new uranium mine, into production now, whilst uranium prices are low, because what they think, and we agree with them, is when we come into production from 2018 onwards, we'll have a lot of new demand. China's spending $570 billion on 60 new reactors, and the big American and US utilities come off coverage. That is, they have to recontract. So we think building now during the down part of the cycle and to come into production when this demand comes in is a good business plan.
Amazing. So it sounds very promising for the future. But how long has Berkeley been doing this, and what's your track record?
It takes 10 years. So we did the deal on this asset 10 years ago, and we spent $60 million, and you go through the exploration, pre-feasibility study, definitive feasibility study, and permitting, do all of that, and then it puts you in the position as we are now to go ahead and develop the asset. So we've been at it for a decade.
All right, very good. And I understand that this Monday you released some news about someone signing on with you. Tell us about that.
That's right. This story that I'm explaining about how utilities are looking to the future and want to contract. So even though the uranium price is $18 a pound, the spot price, we've just contracted for 2019 onwards for 5 years, an average price of around $43 a pound. So we'll produce at 15 and sell at 43 into that contract.
Amazing. Now for our audiences across the world, why invest in Berkeley Energia?
Because we will generate the kind of returns you'd expect from a traditional mining company at the bottom of the cycle. We'll have one phase now, which is capital growth, and then when we go into production, we'll generate very, very good dividend returns to shareholders.
All right. Well, Paul, thank you so much for your time.
Thank you. Thank you, Rachel.
At Mines and Money, I'm Rachel Lee for SmallCapPower.